Welcome to Daily Conversation. This is Mr. K.
This is Eric.
Yeah, today is the 8th of March 2021 and the time now is 6:20 a.m. Well, today our topic is it is a video review and the topic is Ray Dalio comments on current macroeconomics situation. Yeah, so before we get started, please click the like button and subscribe to our YouTube channel. Alright, so here we go. Yep. To be frank, for this video, I watched it twice, and then the first time I watched is before I sleep last night, and then the second time is before the topic today. Yep, and then I find that honestly, it is too difficult for me to understand um, uh, the things that he want to express in this video.
Mm. Yeah, I watched it. I watched it three times to
Yeah,
to
so
to fully understand.
oh yeah, and then yesterday I also tried to look at the comments, and then I found that not only me, there are some other people. They also didn't catch the point uh, of what he want to say in this video. So it seems like it is not fully about the language problem. It's because something that he say is really can I say technical in economics.
Mm, yeah, maybe, but actually, he didn't use the jargon. Mm.
Oh.
He didn't use any of the technical terms. It
Mm.
it's just about the understanding.
Yeah,
Yeah.
understanding, right. Yeah, so I think it really required the knowledge of
Mm.
economics and investment.
Mm.
Um,
Uh.
yeah.
Yeah. But which part you don't understand?
Um, okay, firstly, he mentioned three words, which is diversification, liquidity, and differentiation.
Mm.
Yeah, so for diversification, my understanding is he lined out currency, asset class, and country. So
Mm.
does it means that in our portfolio we need to diversify uh, uh, in terms of these three things? Let's say country. So we need to invest in different stock markets, like not only in US and maybe in China or somewhere else.
Yeah. Because Ray Dalio
Mm,
is the macro investor. Mm.
mm,
Yeah. The Bridgewater is actually a very big institution,
mm,
and uh, it help their investor to invest their money. So they actually uh their money is really a big amount. Mm.
oh,
Like few hundred billion.
mm,
Mm. Yeah. So they cannot invest all their money just in like US stock market. Mm.
mm,
And because they are the macroeconomic a macro investor,
mm,
they need to consider they need to consider the whole macroeconomics, and they also need to not only consider the currency risk.
mm,
Mm. Yeah, please imagine you uh, let's say you invest in, let's say for just example, let's
yeah,
say you invest in Thailand.
mm,
you uh yeah you invest in Thailand stock market
yeah,
in 1997. So there is the Asia. economic crash. Okay, at that time. Because at that time, Malaysia, Thailand, and I think it's Indonesia. The economics is growing, and every people have a very high expectation on this Asia developing country. One of it is Thailand, and you know the George Soros, he actually shot the Thailand currency. So yeah, at the end, Thailand currency and Malaysian ringgit for the value of the currency, the value of the domestic currency drop a lot. Yeah. So imagine at that time, you invest in these countries, okay? Then at the end, the currency value fall. Let's say the economic growing. Let's say the GDP growth rate is 5%, and then we assume the stock market grow also same as the GDP growth rate. Okay, let's say 5%, but the currency, but the currency fall like 7% or 10%. So you actually lost 3 or 5%. And you actually lost 2 or 5%, right? So currency is also one of the key point you need to consider if you are a macroeconomic macro investor. Yeah. So the Ray Dalio talk about the diversification. When they need to do diversification, they need to consider many things. And one of it is the currency, and just now you call the liquidity. Actually, Ray Dalio, his team have interest into Bitcoin. But there are two reasons stop them investing in Bitcoin. Yeah. The first thing, the first point is the history. It's a history of Bitcoin. Just last for 10 years. He don't have enough data. He don't have enough evidence to prove that Bitcoin can be sustained. Yeah, can be last for another 10 years or another 100 years. And the second thing is the liquidity. Yeah, because now the Bitcoin market cap is just about $1 trillion. Yeah, of course, it is a lot. But if you compare to the gold market, the gold market is about 10 trillion. So it's 10 times. Yeah. So for those institutional investor like Ray Dalio, they can't really invest a lot in this Bitcoin market, in this cryptocurrency market, because they cannot put all the money inside. And maybe they can just put 1% of their asset. Allocate 1% of their asset into this cryptocurrency market, but it is meaningless to them. Yeah, because you see 1% grow to another grow 1 times, 1% become 2%, and maybe they think they don't need to suffer the risk. But some people will also allocate some few percentage of asset to Bitcoin. Yeah, some of the institution investor will do that. Yeah, for example, Tesla already invest 1.5 billion into Bitcoin, and also there are many public company. The Square and MicroStrategy. So it's liquidity is a crucial part. Yeah, it is a very important part, because they cannot allocate all the money into the particular market, because when there is systematic risk, I mean the market risk, they need to they need to move their asset to another country or to another class, but the liquidity force them, stop them to do it. You get what I mean? So
Yeah.
it will also have the potential to suffer to get a loss, because you cannot move your asset.
Yeah.
So what's the other thing? Diversification,
Yeah,
liquidity,
diversification.
currency. What's the other thing?
And yeah, the number 3 is differentiation. And
Oh yeah,
then he talked about bankruptcy and disorderliness.
yeah. This is actually the country risk, or we can
Oh.
say the political risk. And he actually mentioned quite clear. He gives an example. Let's say this pandemic.
Yeah.
Some of the country, they apply the dominating approaches, okay, which means force the country people to follow the order.
Yeah.
Some countries like US are not.
Yeah.
So it will also create the country risk, and but it's actually too complicated for retail investor, because even though you cannot you cannot separate the political issue, political factor, and economic factor. So actually, when you want to do investing, you need to know everything. You need to know everything before you take action. You need to consider everything to make a decision. So political risk is also one of the very important thing. For example, now everyone is looking the next step of the Federal Reserve. Whether Federal Reserve will approve the 1.9 trillion stimulation, a stimulus, financial stimulus plan, which is proposed by the Congress, by the US Congress. If Fed approve it, so US stock market have another bull run. Will start another bull run. Because
do you mean
now
that more money supply is being pumped into the market?
this is only one of one of part of it. Part of the reason. Another reason is the Congress will use the 1.9 trillion to stimulate the economy. So that means this money will distributed to the country people. So it will boost the economy, and it will rise the spending. All that. So it's good for company, and it's also good for economic, and it's also good for the stock market, because their financial statement, financial report will become more beautiful. So it can support quote unquote the bubble. The US stock market bubble. It can support it. Okay. So at the end, why Ray Dalio will talk about don't own bond, don't own cash. Actually, it's also because of this. And also one of the people asked Ray Dalio. I forget what he asked. He asked about like something like is it bubble? How do you look at this thing, right? the people mentioned about
Is
the
it
people
the PE
mentioning about
value, the stock price? Is
the discounting the interest discounting mechanism.
Oh,
Yeah, he actually mentioned the Fed. This thing is actually mentioned the Fed. So the interest rate, the long term treasury interest rate, or we say the long term bond, a long term government bond interest rate. Okay, the 10 years, the 10 years US bond interest rate, it's already 4 to 0.
yeah.
And he also, and the asker also mentioned, we have a very high PE ratio compared to our PE is at all-time high.
Yeah.
It's at all-time high. So what Ray Dalio comments? Ray Dalio comments is actually this. The world has changed. And look at the M2 supply. In 2020, our money supply actually increased a lot.
Yeah.
And it's actually the MMT. It's actually the MMT. So the world has changed. And also the capital flow also have changed. Because people realize it. US dominating, or we say manipulate, quote unquote, manipulate the whole uh stock market. He can print money, he can increase the money supply. And he passed the money to the Congress. Then Congress can do the fiscal spending. So all of us is curious how when's the end game? How can it last?
So
Maybe it can last forever. We don't know. So the Ray Dalio say, don't in his opinion, don't own bond. Because Federal Reserve can do this forever. Because this game may be able to do forever. As long as the US still control the power. And as long as US dollar still is the most valuable fiat currency in the world. So Ray Dalio say, the Ray Dalio then say, but the capital flow has changed. Now we shouldn't use the O multiply. Use the O
multiples.
multiply.
What is the multiples here? I also don't understand.
The multiple is actually the PE.
Oh, I see.
And for example, you can mention you can measure the multiply on retail, on company, on institution, and also on country level. If you want to measure the PE on the country level, you look at their asset, their liability, and actually all is the same. If you want to measure the retail, you also look at the asset and liability. How much asset you have and how much liability you have. So he actually mentioned now we are in a new world. Our world has changed. We shouldn't use the all multiply. You shouldn't use the use the all multiples. Multiples to measure the asset value. Nowadays.
What does it mean? It means that we now can accept a higher multiples, or he means the technique to calculate the multiples?
Not we can tolerate the high multiplies. Yeah, it's actually we are forced to accept it. Yeah, because
Oh,
it's the market. We are not able to change. We can only adapt it. Please imagine all the asset, all these financial asset, like the Apple stock
yeah.
and like Amazon stock, Tesla, or Google, Facebook, all these stock can be classified as scarce asset. And also like the real estate and gold, all the asset. I mean all the asset.
Yeah.
Yeah, all the asset which are considered the scarce asset. Okay, their value will just go up if you increase the money supply. Does it make sense to you?
Yeah.
Yeah. The keyword is a scarce asset. Yeah, the keyword is a scarce asset. So this is not like the cash, this is not the bond, because this is not the scarce asset. Yeah, this is the asset. This is I call it the artificial, quote unquote, artificial financial asset which can be created by the central bank. So this is not the scarce asset. It can be created. This is the
Yeah.
artificial asset. Yeah. So anything else?
Yeah, so still the same thing, don't own cash and bonds. So yeah, so this problem is so big, I think. It is related to the whole uh, country level, right?
To everyone, to every individual, to all country is not a big level, but it's related to every individual on the world. Yeah, every individual in the world. Yeah, this is a very, very big thing. Yeah. Actually, now many people are expecting a hyperinflation. Yeah.
Yeah, and
But this hyperinflation maybe is not measured by using the fiat currency. Maybe the hyperinflation is
yeah.
measured by the gold, the silver, the copper, the Q oil, and maybe it's measured by the Bitcoin. And we can say, yeah, if you use the Bitcoin as the base of currency, yeah, everything everything uh 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 if you use Bitcoin
Yeah.
as the base asset, okay, as the base currency, and we actually uh 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 experiencing the hyperinflation.
Yep.
Yeah. So anything you don't understand?
Um, yeah, actually, yeah, still quite a lot because I think it's because the overall knowledge about economics and investment. Yeah, but it
Uh,
is
yeah.
clearer now after your explanation.
Hmm. Yeah. Uh, but I should say, this knowledge we have learned in our college. Yeah, all this knowledge we have learned in the college, and but why I still need to watch 3 times in order to fully understand, because it required thinking. Yeah, and
Yeah.
it seems like you watched the video in yesterday night, and now you watch it again. You don't have time. You don't have enough time to think.
Yep.
Mm, yeah. Okay. So after watching this video, or after listen to my explain to the classification. Okay.
Yeah.
Why is there any comment on this issue? what should we do?
On what should we do? Because don't own cash and then bonds, so it means that
I mean, asset bit. Asset bit.
sorry, what did you say?
Beside of this suggestion, what should we do? Because most of people don't own bond. Most of the retail don't own bond. But we own a lot of cash. And some people in their asset allocation, they have 100% of cash in their portfolio. Yeah. So after watching this video, there's a question. There's a question was raised in my mind.
Okay.
What are in your portfolio? What are in your portfolio? For example, to me, my portfolio now is like it's about 30% cash, 60+% is cryptocurrency. This is my portfolio. So but this portfolio, I didn't include the house. I didn't include the car. Just my liquidity asset.
So you mean that beside cryptocurrency, you didn't invest any other types of stock?
Yeah.
Oh wow.
But previously, the percentage is just like 70% of cash and 30% of cryptocurrency. But now it have changed. Yeah, even though I'm earning the fixed income every month. Yeah. Yeah, of course I invest not all, but it's a big portion. It's a big portion of my net saving. Net saving into a cryptocurrency.
Yeah.
Yeah, but you can see the portfolio. The portfolio is changed. The change of the portfolio is a percentage. I mean the change of the percentage of each asset in this portfolio is very significant. Yeah. Now the cash shrink to like 30% plus. Yeah. But bear in mind, my cash is about a double. Yeah, it's about double than 6 months earlier. Yeah. So it's the case like this. So what is in your portfolio is not looking how much money you have increased, how much money you have earned, how much additional money you have saved. It's not this problem anymore. It's not this question anymore. Yeah, it's what is in your what are in your portfolio. This is more important question. Yeah. Because maybe you only got 1%. You only got 1% of your stock. Yeah. Of the asset, which is called, let's say it is like Google stock. Yeah, Google shares. Okay. And maybe in 10 years time, in 20 years times, this 1% can grow to 50% of your total asset. Yeah. Because we are in this uncertain economic situation and uncertain this financial market situation.
Yeah.
So we shouldn't own cash. Yeah. So
Right.
now it's not the question, should you do investment? Now it's not this question anymore. Is what should you invest? Yeah,
Yeah.
it's no longer the question whether you should invest or not. It's a
Mm.
question, what should you invest
Mm.
in order
Yeah.
to protect your purchasing power in
Mm-mm.
futures. Mm.
Yeah.
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 So
And mm.
yeah. What?
Yeah, yeah, you may you may continue first.
Okay. Mm. And we can see actually the preparation is very important. Mm. If you don't have this knowledge,
Mm.
if you don't have this knowledge, uh, and you can't understand, you really can't understand, and you don't have the awareness, you don't even have the awareness, this problem is coming. Mm.
Mm.
Yeah. And in by learning the knowledge is not just 1 month, 1 year, it requires some accumulation,
Yeah.
and it linked to our previous topic. Mm. I talk about the some people using their old method, and this is on the skill part. If we apply it to the knowledge part, it's
Mm.
actually they use their old view. They use their old view to look at the world, to look at the thing.
Mm.
Mm, yeah, and if you ask them to change their view, to look the thing from different perspective, yeah, they
Yeah.
will say it's inefficient. Yeah, it's inefficient and it is useless. Mm.
Mm.
Because they don't have the full knowledge. So you ask them to use the new partial knowledge that they have just learned to look at the same thing from different perspective. Yeah, it is inefficient and it is totally useless. But you still need to keep learning. It
Mm.
requires some
Yeah.
accumulation. So they didn't do the accumulation, so they back to the old view. Yeah, they use their old view to look at the same to look at the thing. Mm.
Mm.
So in normal scenario, it's okay. Yeah. But when do you know? When do you know this is an unusual scenario? Mm. Yeah. So accumulation is very important.
Mm.
Mm.
Yeah. Yep.
Yeah. So just now, what you want to say?
Yeah. Yeah, I just think that you are really taking risk, right? Um, because just like you said, um, Bitcoins didn't have a very long history,
Mm.
and yeah, the allocation of your money, 30% cash and the rest of 60+% goes to Bitcoins. Yep. So
No.
yeah.
No. This
Mm.
this is something like the balance sheet. This is the financial statement. Yeah.
Oh.
I didn't invest so much money in that. Yeah. If you want to compare
Mm.
my cash, yeah, my cash owning, and also the money I invest in, okay,
Mm.
and my cash is still uh more than the total total money that I invest in this cryptocurrency. Yeah, it's
Oh,
it's
I
it's
got
more
it.
it's more than twice. No.
I got
Yeah.
it. So it means that you invest before the price goes up, right? And then uh now that the value of your Bitcoin asset is becoming more and more, right?
Yeah.
Oh, wow.
So mm,
Wow.
yeah. Uh, uh, just like the thing I showed you before. Yeah.
Mm.
I only allocate 70% in sorry, I allocate 70% in Bitcoin and only
Mm.
30% in Ethereum. But Ethereum has grown to 51%. Mm. And
Mm.
now the Ethereum, yeah, because recently Ethereum price is fall quite much. Okay. But now until as of today, Ethereum take my investment portfolio also like more than 45%. It's about 40, 46 or 47, 48%. Yeah, this is still huge. Yeah, even though I allocate 30%, 30%. Yeah, now the 30% grow to like 48%. So can you imagine? This is something like initially you have 70% of cash, and you have another 30% of like stock. Okay, and now your cash shrink to like
25.
The cash shrink to like 51%, and your stock value grow to 49%. It's a similar concept. Yeah.
Yeah. Yep.
Yeah. So yeah, actually I found that there are more and more people are concerning this issue. I remember there's one conversation I share you the M2 supply chart, right?
Yeah.
And after I share you, and few days later, I watch some YouTube video. It's like two or three YouTubers that I subscribe. Also use the same chart to explain something, to express their opinion. So it's quite weird to me. It's also quite interesting to me, because suddenly everyone move the attention. Yeah, suddenly everyone focus on this thing. Yeah.
Yeah. Yeah. So that means that you are also one of the person that is ahead of the changes.
What do you mean, head of the changes?
Ahead of means that you are not lagging behind to look at the issues.
Yeah. This is also this is about the preparation. I prepared it 1 year ago. Yeah.
Yeah.
Yeah. And just now you talk about investing in Bitcoin is high risk. Yeah. I agree. It is high risk. But I showed you before. Nowadays we should take more risk.
Yeah.
And we are not like the Dalio. We are holding 100 billion of fund. Yeah, we are just retail investor. So the liquidity of Bitcoin is too enough. Yeah, is enough for us, because this is a 1 trillion market. You know 1 trillion means what? 1 trillion means like 90% of the stock in the world. 90% of the stock in the world don't reach 1 trillion market cap.
Yep.
Yeah, only few of them have 1 trillion US dollar market cap. Yeah. For example, you can check. Only few of them. Only few of them have reached 1 trillion. Yeah. For example, if you type Microsoft market cap,
It's
Microsoft.
only 1,700 billion.
Wait a minute. Yeah. So it is 1.3 1.7 trillion, is it?
Yep.
Yeah. So how about Tesla?
Tesla. Wait a minute. Tesla hasn't reached a trillion. It is
Yeah,
like 0.57
yeah,
trillion.
yeah, yeah.
Mm.
So yeah, it's actually enough for us. Yeah, because
Yep.
there are many stocks don't reach this market cap.
Yep.
Mm. And also, if you really want to talk about liquidity, cryptocurrency, you can trade 24 hours, 7 days, and
Yeah.
and yeah, and 365 days per year. Yeah, yeah. So you can trade in any time.
Yeah, the market never close.
Yeah. So if you compare the liquidity to the stock market, if 1 trillion compared to 1 trillion, I would say cryptocurrency have higher liquidity than the stock, than a particular stock, because of because you can withdraw money, you can sell off your Bitcoin in any time. So it is about the liquidity.
Yep.
Mm.
Yep.
Okay, so anything else you want to add in?
No. How about you?
Yeah, I also finished my my point. Okay, so that's all for our today conversation. How do you feel? Did you enjoy the conversations? Please tell us what you think of our conversation. And we are not native speakers. If you found any vocabulary mistake that we made, please also comment to let us know, because we want to learn more and improve ourselves. Remember to like and subscribe to us. Thanks for watching. See you tomorrow.
See you tomorrow.